All right, good afternoon. Welcome to Trader Minute. Great to have you aboard. Let's go talk some candles, and let's start off by looking at our two candlestick trades, and let's talk about those. And then, similar to yesterday, I'm not going to talk about a new pattern, as I don't see a lot of new patterns setting up out there. But let's talk about some of the patterns that we've seen emerging, some of the patterns that are actually happening out there today, and let's see if we can apply a little bit of candlestick analysis to the broader market. So let's start with our new trade that we got into yesterday at the close with the island reversal candle pattern, the abandoned candle pattern here on XLE, where we had the gap up last week, then the gap down yesterday. And one of the things I mentioned yesterday is I'm not sure if I'm getting the best price. With some of these island reversals, you can see a little bit of consolidation. XLE opened higher, sold off. It's come back a little. The Exxons and the Chevrons are giving it a little bit of strength there. But overall, it's done nothing to wipe out the bearish signal. So I'll continue to hold XLE gladly, and still looking for that to have its correction. One of the things I really want you to kind of see with this XLE, this kind of abandoned pattern, is it tends to be a little bit more of a longer term pattern, meaning you can get a little consolidation because the gap down creates a short term oversold condition. So we're seeing that with the XLE, overall 86 and a half. We start to get above there. That'll make me concerned. But where it is right now, frankly, is a place where if you're not in the trade, you want to get into the trade. It's a beautiful entry point here on the XLE. Let's talk about AUY, which we got into a couple days ago. And we got into it as really there weren't a lot of candle triggers, so we were playing some of the candle triggers on gold that we had the week prior. We had a nice little bullish Marabozu on Tuesday. We got a Harami action yesterday. And today, we got a nice gap up, erasing most of yesterday's losses. And we've had a little bit of flux here with the AUY. Between up to about 1030 and down to about 1010, a little 20% flux. That's not uncommon. These gold miners, I mentioned it yesterday. If you've never traded the gold miners, even though on the chart it doesn't look like they're big swings, from a percentage standpoint, they can have just some huge swings in them to where they're moving 3 to 5%, and it's not overly significant. I was asked this morning, as AUY looked like this, if I was concerned about the gravestone doji forming on AUY. Yeah, I mean, obviously, always concerned about a gravestone doji. The one thing about this gravestone, it doesn't have a really long wick on it. But, think about AUY. If it were to rally 10 cents into the close, it would completely erase that. So to say, hey, you know what, AUY has that type of, bearish action on it right here is very difficult to assess and to say there in regards to AUY. So we're holding these two. For the candlestick challenge, don't have enough cash here to get into another trade. I would have to cash out my gains on AUY to do so. I may do that simply because some of the other candlestick setups out there are so nice. I may decide to do that. So let's go take a look at some of the setups out there in regards to candlestick patterns. Let's go take a look here at Oracle. Okay, here's Oracle, and Oracle tech stock, and has been finding a little bit of consolidation recently. Today, getting a beautiful kicking candle. It didn't gap up above yesterday's prices, but it had a small gap up today, and in one day is basically wiping out 3 days worth of selling. Similar activity to October 7th and October 8th right here. Now, with Oracle, I think this action, this candle action, is probably good for a trade up to about 33.5 or 33.60. Okay, so you can play this candle pattern. Chances are you'll get a good 30 to 40 cents on it. Now you have to ask yourself, do you want to take the risk on Oracle, for that dollar amount? Okay, so that's one of the things with candles. They can be real short term, and with Oracle, that's really what we're seeing. We're seeing a very bullish short term candle here. Let's go take a look at Intel. Okay, Intel, the guys here, they know I'm drooling to get into Intel short. They know I absolutely want to get into Intel short. Love the pattern action on this. We had the nice kind of kicking candle, the gap down yesterday. Today with some harami action that will allow for an entry using 24 as a stop. So while today's candle on Intel isn't the bearish candle, playing off of yesterday's bearish action, using 24 as a stop is something that is set up very, very well. Take a look at Campbell's Soup. Okay, Campbell's Soup. And we have a short-term uptick, through October. Short-term upward trend. A strong bullish Marabozu on Tuesday. A small gravestone doji yesterday, and then confirmed follow through here today. Even with some of the strength in the consumer staples, Campbell's Soup is showing some strong, bearish activity here in regards to their candle formation, and that's almost similar to Hershey. Hershey reported earnings is seeing that same type of activity. The rally, the strong bullish Marabozu on Tuesday, the kind of resting period yesterday, the uncertainty candle yesterday, and now the follow-through breakdown here today. Okay, so Hershey Foods, Campbell's, both very similar there. Take a look here at AT&T. Okay, AT&T earnings, not so bad, right? Goes down real big here on the open, coming back up. Not a lot of volume here, okay. But this type of thing, AT&T closes above 35 here today. Okay, we have a very bullish hammer candle, a dragonfly doji essentially. So if you look back here in July, where we have a gravestone doji, AT&T closes up around 35. We would be talking about a dragonfly doji with very bullish implications. Okay, but I caution you to kind of anticipate that. The reason being is a lot of times, and we've seen this with gravestones not really helping out on the short side. Take a look back here in September with this candle on AT&T. AT&T broke down, had a long wick on it, rallied all the way back, but then near the end of the day, AT&T actually trickled lower and didn't create a full-on dragonfly doji. What ended up happening? Well, eventually this wick got filled. Okay, this wick got filled. And very similar to what we looked at with Walmart before, where some of these wicks, when they don't trigger these bullish candles, they can really kind of have the actual bearish tone to it, where that trading, that sell-off actually gets filled. Okay, so I with AT&T, definitely would want to wait until closer to the close to make any sort of assessment on there. Okay, potash here. Okay, here's potash. We talked about the bearish breakaway candlestick pattern. Okay, and we've also talked that a lot of times earnings will confirm or deny different candlestick patterns. Well, potash had earnings. Went through some of the earnings here today. They weren't very pretty. It wasn't something that I'd look at and say, oh, you know what, here these earnings, it's selling off on these earnings, let's go buy it. No, not at all. Okay. In fact, breaking below 31, you actually give some strong confirmation to this bearish breakaway pattern. And for those looking to get short, something like potash, even if it closes up here around $30.50, 30.70, puts a little bit of a wick on it, chances are that that wick gets filled. And so we'd be able to play that, play potash to the downside there. Let's take a look here. Let's go to Baidu. Okay, let's go to Baidu. Okay. Baidu here, you could argue, is creating a little bit of a bullish continuation pattern. Okay, where we have the bullish Marubozu, the breakout. Okay, the breakout. Then we have this 3 days, kind of the 3 days where it pulls back, and this would be a rising three methods. Okay. It's a little bit different than the rising three methods that we had happen right back here in September, where we had the strong bullish Marubozu, then we had 3 or 4 days of pullback, where it all happened within the bullish Marubozu. Here with Baidu, okay, we're getting something more like back here in May, where the low of that bullish Marubozu gets broken. Okay. Still tends to have bullish implications with a snapback, and we're seeing some of those bullish implications come into play. But really, for confirmation that this thing is ready to go and take off to the upside, you need a close above the high of the bullish Marubozu that was set on Friday. So above about 166 there. The Kihus, you've heard us talk about these, the Kihus of the world, the Sinas of the world, the Sohus of the world. They all have that very same pattern. Still no real bullish confirmation, but some strong potential there. Okay. Here's Goldman Sachs. I bring up Goldman Sachs because I want to show you how candlestick patterns, they tend to call for reversals, right? And when stocks are in a consolidation mode, those reversals can be day to day, where we can have a dark cloud candle on Tuesday lead to a gap lower and a bullish hammer on Wednesday, leading to a gap higher today. And where you can have bull, bear, bull, bear, bull, bear. Those of you looking for quicker trades, where you're in for 5 hours or something like that, these candlestick patterns, when a stock is consolidating, can give you some of that action with those trades. When I look at Goldman Sachs here, and you say, well, is it going to go up or down? Well, yeah, okay. It's consolidating. Obviously, I have a little bit of a bearish bias. We had a bearish candle on Tuesday. That's getting wiped out because the stock is really more in a consolidation mode. Okay, and that's been one of the things that has just kept me away from Goldman Sachs, is it's consolidating. Why do I want to mess with it while it's in this consolidation mode here? Take a look at Kellogg's. Okay, here's Kellogg's. Kellogg's had a very nice little bullish candle with the nice 3-day follow-through, getting a little bit overbought. Now a strong bearish engulfing coming in here. Is this uncommon action for Kellogg's? No. I mean, just take a look at when it's kind of been bouncing up and down and all around. It will give a bullish candle, have a few days follow through, give a bearish candle, have 1 or 2 day falling through, or 1 or 2 day follow through there. Okay, and really give some potential bearish activity there. I was asked today if I was concerned about the TLT, which we have for the 100K challenge. And my answer when I look at the TLT is absolutely not. But one of the things that concerns me just a little bit is seeing some of the consumer staples weakening here today. Some of the bearish candles in consumer staples, some of the bearish candles setting up in the XLU. But keep in mind, when we're looking for a bearish reversal, we're looking for some volume, and so far we don't have it. Okay. Take a look here at Cigna. This is one Carl showed to me here today, and it has a very much a confirmed falling three methods. It's a bearish continuation pattern. What do we have? Well, we have the bearish breakdown, right? We have the bearish breakdown here in middle October. We have two up days, relatively light volume compared to the sell-off. And basically, they happen within that last bearish Marubozu. Then yesterday, we get the breakdown. We get the close below the lows of the falling three methods. We get the confirmation that the downtrend is continuing. Okay, and we're seeing some of this action not only in Cigna but in Aetna. Okay, in UNH, in Humana, not quite confirmed in Humana, but that same type of action, and really it's quite opposite to what we're seeing in Visa, which is kind of giving some bullish rising three methods, even though it had that gravestone doji 2 days ago, light volume. Okay, we have the rising three methods, the whole bullish implication. Okay, so we're sitting here in a market that is just really fascinating in the fact that it just has so many stocks with bullish, so many stocks with bearish undertones going on that you can really play it. You can really play it whichever way you'd like. You can go set up some call plays. You can go set up some put plays, and really have the odds in your favor. And as long as the market stays relatively flat, the calls will continue to work and the puts will continue to work for the trades that have these candlestick setups here. As far as our trades go, the XLE, okay, even as I've been talking, it's pulled back almost 15 cents, and it makes it look a lot less bullish, right? It kind of keeps that bearish confirmation in play. Like I said, my biggest temptation from a candlestick standpoint to play is Intel short, and I want to see low volume here today, right? We have a Harami action. 24 becomes a very easy stop level there. Okay, very easy stop level. And I have even thought to the point of, hey, you know what? Maybe I do it for the candlestick challenge and don't take anything else off. And those of you who want to, get in can get in if you have some extra cash, or can play it how you want there. But that is kind of going through my mind, especially because AUY here, the way that the gold miners are acting, the way that the price of gold is acting, just tells me that they want to continue higher. And so I'd really like to stick with AUY at least for another day or two here. All right, so no real strong candlestick patterns, as far as brand new ones that we haven't looked at, but we have a lot of different candlestick patterns potentially setting up. Granted, we're still 3 hours, 2.5 hours before the close, so some of these can change, but these are where we're starting to see some of the action come in from a bearish standpoint. I was asked today if I'd short Mosaic. Okay, Mosaic has a perfect, a perfect. Sorry, the candlestick pattern just left my head. Short-term memory loss here. But the bearish pattern here, it'll come back to me here in a second. But the very strong bearish breakaway pattern here, confirmed on news. What's that news? Negative earnings out of potash. We also have a bear vibe signal setting up on this. Everything you'd want to see to be short Mosaic right here. Another one that been asked about a couple times here today is the bullish engulfing on Caterpillar. And for Caterpillar, this bullish engulfing is meaningless. It's absolutely meaningless. One of the reasons, and one of the things that as Caterpillar made some of its bear signals throughout August and September, one of the reasons I never wanted to go play it is because Caterpillar has a stock buyback. And if you're Caterpillar management and you release earnings and your stock is down 5-6%, what are you going to do the next day? Well, you're going to kick in some of that buyback. You don't want your stock to get routed. You're going to kick in some of that buyback. And to me, that's what's going on here today with Caterpillar. Okay. So would I trade that from a bullish standpoint? No, because you're trading it, in the midst of this heavy gap. Yes, it is a bullish candle. Yes, it could go up. But as far as calling this a bullish engulfing that has strong implications to the upside, that's really tough. That's really tough to make that call. Alrighty, so as we kind of head into the close, we'll kind of keep our eyes on some of the other patterns. Some of the patterns that are happening around some of these earnings, and if the earnings result matches, go with it. Okay, if the earnings result doesn't match, no. Like with potash and mosaic, the earnings result matches. Here with Dow Chemical, okay, Dow Chemical, take a look. Earnings, they slight miss. I haven't gone through the call yet. I will do that here this afternoon. But, Dow Chemical able to close up around 41. We would have a strongly bullish candle, big volume, an event telling us, okay, bad news, sellers don't want to step in. Okay, we can trade Dow Chemical higher. Or we can go to DuPont. Take a look at DuPont breaking out. It's now its third day above 60. It's had its earnings, okay, with a very nice breakout here today. You can kind of play some of the bullish candle action from its own earnings as it's getting even more confirmation here today. So those are some of the candle setups that are out there. Again, as far as a candle setup to highlight, my favorite one continues to be this potash mosaic with the bearish breakaway pattern. And we see potash close somewhere around $30.80, $30.85 would be really interesting for a downside entry as we head into the close here today. All right. Well, thanks for hopping on. Carl will be on here with you as well today, talking Vibe and Trend Rider trades, and we will talk to you later. Take care.